We're going to explore low-risk, conservative investing if you're building a nest egg for your retirement or you've already retired using stocks and bonds. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. We're going to explore the idea of low-risk, conservative investing. We're going to share some ideas here if you're looking for more of a steady return with low risk of loss. So what exactly is a conservative or low-risk investor? As someone is wanting steady returns, as we said, low risk of loss, an investment that can weather the storms. Who qualifies as a conservative investor? It could be a retired individual. It could be someone approaching retirement and they don't want to see their money get caught up in a downturn in the stock market. It could be someone that's not familiar with investing or the stock market. It could be someone that's had a bad experience before, maybe lost money, and they really don't want to jump back into the markets. Keep in mind, when we're investing in stocks and bonds, there's always some level of risk, so be aware of that. We're going to look at 2 funds that you can use for low-risk conservative investing. Then we're going to look at 3 options that you can build on your own. Let's take a look at our first fund. We're looking at Vanguard Wealthy Income. It's 40% in the stock market, 60% in bonds. The last 3 years had a return of 8.41%. Keep in mind, we're not looking for a high growth fund, but something that is steady. It also has a dividend of 2.62%. You can see that these top 10 holdings here, there's no one stock that is overweighted. So if one of those stocks is down, it doesn't affect the overall portfolio very much. As far as the bond portfolio, they use high quality AAA bonds, AA bonds, A bonds, BBB rated bonds. The next fund we're looking at is Vanguard Life Strategy Income. It's only 20% weighted in the stock market, 80% in bonds. 3-year return 6.28%. Again, we're looking for steady and not a high profile stock. The investment strategy here on Vanguard Life Strategy is a little bit different than Vanguard Wealthy. This invests in more of the total stock market. We're looking at the top holdings: Vanguard Total Bond Market, Vanguard Total International Bond, Vanguard Total Stock Market, and Vanguard Total International Stock. So we're getting a wide variety of stock holdings and bond holdings. And the bond holding is anywhere from AAA rated bonds down to BBB rated bonds. Now, if you want to build your own portfolio, here's some examples. Vanguard Total Stock Market ETF, you would be 20% in stocks using the Vanguard Total Stock Market, and the rest of your investments would be in these 2 bond funds. Double Line Low Duration Bond Fund, 40% in that. Osterweiss Strategic Income, 40% in that. Last 3 years, this model's returned 7.5%. Now, the reason I like this is using low duration bonds. These don't have near as much fluctuation as long-term bonds. Let's look at this a little bit deeper here. The Vanguard Total Stock Market has had a 3-year return of 17.17%, which is not bad. The idea here is when the stock market is not performing as well, the bonds balance out the portfolio. Instead of being invested 100% in the stock market, you're 80% in bonds, so they help balance your stock market performance. Let's take a look at our option 2 and option 3. Again, still using Vanguard Total Stock Market, 20% in Vanguard Total Stock Market, but using 2 different bond funds, PIMCO Income A and BlackRock Income A, 40% both in those. The advantage to these do pay a monthly dividend. So that's a nice addition there in this particular situation. Option 3 is going to be for someone more conservative. Again, Vanguard Total Stock Market, 20%, but using Vanguard Short-Term Federal, 80%. Minimum investment on that is $3,000. The Vanguard Short-Term Federal is going to be in high-grade bonds. Okay, so we've looked at some of our strategies here on low-risk conservative investing. Let's take a look at some long-term results here. We're looking at the Vanguard Wealthy Fund. This is a 10-year chart. You can see it does have some fluctuations. It only came down about 20% and quickly recovered. Most of the stocks in the stock market went down 40 to 50% during this dip in the pandemic. Again, if you buy on the dips, you're going to be buying low, and then the market can move higher from that point. So just to repeat, the Vanguard Wealthy is 40% invested in the stock market, 60% in bonds. Here's the Vanguard Life Strategy Fund. Again, 20% in stocks, 80% in bonds. It did have a dip. There's only about 10%. It's real hard to not have any type of dip at all. The market is going to fluctuate, but you can minimize it as much as possible with a fund like Life Strategy with Vanguard. Now, if you're going to be investing your hard-earned money into the stock market, maybe you have $10, $50, $100,000 you want to invest, or maybe you're already invested. It's very important to keep track of your investments. I can't tell you how many people do not watch it, do not pay attention. Then all of a sudden the market's down. They're wondering what's going on. But I do like to use a chart myself. You can see here with this fund, when it comes down to the 250-day moving average, it typically bounces higher. Not in every case. There's nothing that's totally perfect when analyzing the markets. But here we're using the 250-day moving average. When it dips down to that level, that's a good buying place. So you can be patient here. You can see at this point right here, we're a little above that 250-day moving average. Wait till we have some type of movement down to get the best price when you're buying your investment. So back to what I said about watching your investments. If you bought 100 head of cattle and put them out in a field, you wouldn't want to just come back a year later and see how your cattle is doing, expecting them to be nice and fat and ready to go to market. You want to watch your money, watch it closely. In this day and age, anything can happen, so we want to be very careful with our money. You worked hard for it, so don't let it slip through your hands any quicker than it already does. So I want to thank you for watching. If you have any strategies you'd like to share or any other comments, leave a comment. Stay tuned for future videos.